Happy Sunday, everybody. Welcome to another edition of Money Church, our Sunday Money Church, where we talk about investments and what's going on throughout the week in the markets, in the economy, and how ultimately it's going to impact your pocketbooks and your wallets. Got to make sure I'm fair to the men and the women and include everybody. What's up, Corey? How you doing, brother?
Man, I'm living La Vida Loca, man. Like, just living feels good, man. So I'm not gonna complain about, how I feel or what I feel, because that's not important, man. It's important to me, but it was more important in the long run is that I got up. So, man, I'm ready to
That's
rock.
the big picture. That's the big picture. All right, so we got a presentation for y'all this morning. And again, we're starting to kind of get in our stride and figuring out what's best to bring to everybody. All right. So every week we want to start going over what's going on in the markets, how it's going to relate to us, how it's going to impact us, and basically how we can benefit from it or maneuver to be safe in it. All right. So this week's sermon is the gospel strategy in dry powder. Okay. So every week we're going to be talking about things that we can implement as we always do, but it's going to be a little bit different. All right. So this week we saw the markets jump slightly. The S&P 500 was up 0.4%. The Dow Jones was down 0.3%. Bitcoin hit 113 for the week, right? And the Nasdaq was up as well. So we kind of had a good week, so to speak, in the stock market, but there's a lot of other things going on in the background that kind of, in my opinion, mutes all the noise. All right. So we're seeing these sectors. The sectors are jumping. Communications was up 5%. All right. We saw consumer discretionary up about 1.7%. Now energy fell 3.5%. Now that impacts me personally because I'm running some leaps on XLE, and XLE has been getting slapped a little bit, but my leaps are going out to 2027. So I'm not really worried about it. And I do believe oil is going to increase from where it is. I need to go back and revisit that, but I believe oil is going to go up from when I initially put it in. But we're going to share our ups and our downs as well, just to show y'all where we're at with them. All right. And financials also dropped 1.7%. So the financials being the banks and insurance companies, so forth and so on. So, you gotta be in tune with all those things, but make sure you're looking at this thing from a long range perspective. Now, the jobs report came out, and a lot of people had some interesting takes on the job report, in my opinion. Jobs were up over 22,000 jobs, new jobs created. They were expecting 75,000 jobs, but that didn't happen. And me and Corey were talking about this, right? Because we talked about the unemployment rate is the highest it's been since like 2021, up 4.3%. And actually, historically, that's really, really good. But Corey talked about this and how, Corey, you there?
Yeah, I'm right here.
Yeah. And he said, what did you say again, Corey? I forgot how you said it.
So what's really happening with that jobs report is that a lot of those jobs that were created were part-time jobs. So really,
Right.
in actuality, the jobs report was negative jobs because your full-time jobs created was like negative 500,000, and then the positive jobs created was like positive 500,000 and 20 or 520,000 part-time jobs. So basically what was happening is full-time jobs are declining and part-time jobs are increasing, which is gig economy jobs like Uber and Lyft and stuff like that. So what's happening is people are being pushed out of full-time jobs into part-time jobs or gig economy jobs. And
that doesn't really lead to stability, right, Corey?
No, that's not economically feasible for the long term. That affects a lot of different things. The CPI and all of that stuff is built around people having money to spend. And if you moving people out of full-time into part-time jobs, means that people are super struggling. Like it's getting hard out here for people. Like I don't even know how else to put it. So that jobs report was really kind of damaging. Like when you look at the actual numbers, and who lost their jobs. So when I was looking at who lost their jobs, percentage wise, you had white people. Everybody went up a little bit, so it was like 3.5 to 3.6 for white people. Asian
That
people,
core.
huh?
Real quick, people don't realize that the BLS reports, they break it down by race.
They do.
And so, people be talking about race don't matter. Well, the government's still tracking things by race.
They are. Then it was like 3.7 to 3.8 for Asians. It was like 4.3 to 5% for people of Hispanic origin. And then for black people, that joint went from like 4% to like 5.8%. So when you want to see how something is disproportionately affecting black people, that jobs report showed how it was disproportionately affecting black people, but no DEI though.
Well, it's interesting also because we're starting to see a lot of the government layoffs come through in the numbers as well. And so the thing I'm wondering is like, was Doge even important? I mean, we know the answer to that, but it seems like Doge is going to cost the government more money than what they so-called say.
Listen, man, we knew from the rip it was going to cost us more money because what they don't understand is that social services create money because human beings, when they are happy, they create more. And so, like, literally, human happiness is an energy that creates more streams of funds and energy and all of that stuff. And so, what they're doing by creating all of this turmoil and unhappiness and uncertainty is costing themselves money. People like certainty. And when there's uncertainty and when there's turmoil and turbulence, money goes out the window. Only the people who are set up for chaos and disorder benefit, and the people that are disproportionately set up for chaos and disorder are the people who caused it.
And that's usually only in the short term anyway, right, Cor?
Yeah.
Yeah. All right.
Just as a little baby economics lesson. And this is not even about, like I said, I'm not an economist by any stretch, but I follow money. That's my favorite thing to do in the market is to follow money. And I'll talk about how I actually follow money. I look at a couple indexes and a couple of things to track money. So we'll talk about that later, though. Let's move on.
Right. But, the last thing I'll say is the labor market is definitely cooling off. And they're trying to use that as a catalyst to pressure the Fed to cut rates, which I don't think that's the right call, but who am I? They don't care about me. All right, so CPI, like we were just talking about inflation, CPI stands for Consumer Price Index. All right, so that's up. We talked about this last week, 2.7%. Core CPI is up 3.1%. All right, and down over in August, they believe it rose to 2.84%. This, to me, is further ammunition and evidence why we do not need a rate cut. Because when the rates get cut, it's going to put more money in the economy. More money in the economy, I guess, encourages more spending. But it's not necessarily spending on things that really matter.
But it doesn't just encourage more spending; it encourages more borrowing, which is the thing. When people are losing jobs, and then you're encouraging more borrowing, like it's.
And so I was going that core, but you're right, right? Because they encourage the borrowing to then do more spending. And then so for us regular folks, we borrow, but we're not really using the money to invest. At the corporate level, the 1%ers, they borrow and then they invest. And so that helps to make a bigger wealth gap. And I'm not saying that it's right or wrong, but when you look at it, you see the disparity there. And when you see the policies that are already in place to help fuel that disparity, it's a bad thing. It's a bad thing, in my opinion. In my opinion. If y'all have opinions on the markets and unemployment report, please throw them in the chat, y'all. Tell us how y'all feel. Tell us how y'all feel. All right. All right. So GDP growth, relatively resistant, pretty even. It's not doing bad. It's not doing good. It's just kind of blah. So again, that's another reason why I don't really feel like rate cuts are really the way to go. All right, so the market had a couple of standouts last week, as they always do, right? And so outdoor tech up 56% last week. All right, Pinnacle Foods up 43% last week. K-Wave Media up 41%. Now, remember, this is not a trade recommendation. This is not investment advice. This is not tax advice. This is for educational and entertainment purposes only. But just some things to keep your eye out for, because I was wondering, I've been hearing about K-Wave, and so I definitely got to dig deeper into it. All right, so remember, dry powder really rules the world. And dry powder meaning cash on hand, cash that does not have anything that it's attached to, can really be a cheat code. Why? Because when there's opportunities there and you have dry powder and you have cash, you can deploy that asset to buy assets on the low. So that's why one of the reasons why I always say cash is king. Because if you're diligent to save, you have money to deploy when the market presents itself. What you got, Corey?
This is why we're just talking about the chaos and disorder, right? Most Americans don't have $1,000 saved, which is
Correct.
why when they create this chaos and disorder, and they disproportionately are able to come out on top from the other side. Because what happens is the debt falls onto the people and the growth goes into the companies. And so, and disproportionately, those companies, that money goes to the CEOs and not even the employees. So just, as a general rule of what's going on right now, that's what's happening.
Right. And I mean, I got to work these slides a little bit better, but we talked about this before. Warren Buffett has roughly $325 billion just sitting in cash. Talk about a dry powder stash. Because those who are prepared for opportunities are the ones who make out the most. But you don't prepare. I'm going to use a war analogy. You don't get prepared when the war starts. You had to be prepared before the war, because those who prepare or try to prepare when the war starts, you're going to lose automatically. Now, sure, you can make some tactical short-term decisions, but if you're not ready at all, it's a wrap. It's a wrap. So remember, you don't need billions. You don't. Just start with a little bit of money. Put $50 aside a month, $10 every time you get paid. Just keep dedicating to put some money to the side. And then, again, opportunities will present themselves for you to take that money and get busy and make some more money. All right, y'all. So that's it for this. Whatever questions y'all got, whatever thoughts y'all got about the markets, let us know. But I'll just say this: stay liquid, stay learning, and stay ready, y'all. All right, cash is a weapon. Don't forget that. Strategy is our shield. Economic liberation comes through disciplined investing and strategy. So again, stay learning. Y'all always hear us talking about reading books and doing all the boring stuff. But those are the things that are going to matter in the long term. So, Cora, what do you think, man? What should people be doing right now?
Man, two things, and this is not economic advice at all, but the two things that I'm doing, I'm just going to say what I'm going to do. I am building a cash/Bitcoin reserve.
Okay.
Because I really feel that opportunities are not only going to be there, but they're going to be there in a big way. And I'll explain how I come to my conclusion. And then the other thing is to I'm going to start on the power of numbers, which is leaning on my brothers and sisters to help me to get where I'm trying to go. Because going alone is ridiculous. It's really silly in a lot of ways, because everything that's happening is affecting us all. So why not come up together?
And it's funny, so, people really don't realize wealth really is a team sport.
Yeah, so I'm going to really start making it my business to help people with whatever they need. So I was saying on Friday, I'm working on a project called Equivalent Exchange. And really it's just about exchanging what you're good at with something that somebody else is good at, and making sure that everybody's covered. You know what I mean? So
Cora, I want to hear more about that, but let's check in with these comments real
quick.
Yeah. What's up, everybody? Sure. All right, Miss Maui, what up? Dr. Chad's in the building. Virgo Life, happy Sunday. Warren Buffett is a bad example. Tell us why. I disagree, but tell us why.
He's a bad example because of the amount of money. I can tell you why. Because $325 billion is a bad example for everyday people.
Yeah, but so you're majoring in the minors, in my opinion, right? The point is, you don't have to do what they do. I'm not trying to mimic them. I'm not trying to mimic their strategy. But I always find it interesting with Warren specifically. They always chide him. They always talk about him because he doesn't follow everybody else. Nobody else is talking about cash or hoarding cash, at least publicly, right? But what does he do consistently? He builds cash and then he buys full railroads. He builds cash.
He builds cash reserves and then
he buys
he fires
ketchup, right? And so listen, I'm not Warren. I ain't got Warren money, but I can learn from Warren and say, all right, well, I might not be able to buy a railroad or a Heinz ketchup, but can I put $5,000 aside and buy a real estate property? Can I put $5,000 aside and reinvest more into my business? I mean, that's the thing. I mean, in my opinion, but Virgo Life, tell us more. What up, Lawrence? All right, so he is not prepared for economic downturns, will suffer the most from economic downturns.
All the facts.
All the facts.
So, and that's really what I was just talking about earlier. Like, the thing is, our country isn't set up for people to be in that position, and our current administration is making that infinitely worse. So just my personal opinion about what is happening. And here, all right, so this is why, right? And so I'm going to talk about this really, really quickly. This is part of me tracking money, and why I say our government is setting us up for an absolute kick in the teeth in years to come, right? And so what's being done right now is going to take generations to undo, right? So what I do, I look at the stock market, but I only really look at the stock market, to track a little bit of stuff, right? That's not really where the action is at. What really controls our economy is the bond market, right? Because the bond market is the place where rates are set and all of that kind of stuff, right? So what I look at the most is 30-year treasury bonds. Why is 30-year treasury bonds important? 30-year treasury bonds tell you, as the consumer, what people feel about the United States debt. And if you know anything about the United States debt, we have a very large debt service, right? And the interest rate on that debt is how safe people feel about buying our debt, right? And so what I've seen is that that number is steadily increasing, and it's increasing at a rate that is kind of scary. And so what's happening is what that is telling you, and is what it's telling me, and it should tell you, is that people think our debt is is riskier, right? And if we can't sell our debt, then everything else is going to be a mess, because all of these companies that you see, the interest rates on them are going to start to go up and creep up, which means that even if and this has to go with the Federal Reserve too. The things that they're doing are creating crazy economic instability, messing with the Fed, right? The Fed is supposed to be an independent entity, right? And so when you start messing with the Federal Board of Governors, that creates disjointedness, because now they're saying that's not an independent entity. And so now when we go to sell our debt into the market and we don't have that independent entity there, people are like, well, all right, normally I would buy your debt for 3 or 4%, right? But because I don't trust you, you're gonna have to pay me 5% on that debt over 30 years, or I'm not buying it. Yep. Right. So the thing about that debt is that people don't have to buy it. And who's the bigger buyers of that debt are banks in other countries. And so when he keeps making enemies out of these other countries, it affects our bond market, which affects all the other markets. So when he's making these enemies and when he's causing this economic disturbances and chaos, he's costing you money every single time. Or every enemy he makes costs you money. And this is why I say like every enemy that our president makes costs us money.
All right, so Corey, I pulled this up for you just to kind of talk about the bond market.
Stephen Major of HSBC adjusting his outlook. We shift our 2025 10-year Treasury forecast to 350, reflecting uncertainty over the floor. The reversal of the summer rally looks overdone, so we keep the near-term conviction at bullish. Steve joins us now for more. Steve, my friend, welcome to the program. Let's start with that near-term bullish call. At a time where a lot of people are bearish on the bond market, give us a reason to be bullish.
And for the record, the 30-year being at 4.5 is like unheard of. It ain't been that way in a long time. That's
the 10-year.
Oh, sorry. You're right. But
yeah, but I was just giving an example. That wasn't the actual numbers.
No, I know.
Well, it's all about the forwards and what's priced in, John. And we've spent the last 2 months pricing in what's just happened. It's no longer an uncertainty in terms of who's going to win the election, is it? So in fact, we've probably removed some of the uncertainty from a few months ago, in my opinion. We actually know who the president's going to be next year. But as you were saying in the prelude just now.
So when he talks about, who the president's going to be next year, they're saying because the bond market is the greatest predictor, as Corey is saying. And they're saying rates are going to go up. Inflation is going to go up. The cost of debt's going to go up. It's not a good thing.
The sequencing of these policies is still a bit uncertain. The only thing that we've got to really go on is the valuations, and markets are priced for a much higher equilibrium rate than the Fed's been indicating. So, 4% or more for the longer run equilibrium. And in the recent piece that you referred to, I gamed out a scenario whereby the Fed even reversed its rate cuts of this year. Now, I'm not saying that's our baseline. It's not our forecast at all. But I'm just saying, to try and game out what the yield should be, you have to imagine a scenario whereby the Fed gets really hawkish rather than just pausing. And I think that if that was to happen, and it's unlikely, but if it was to happen, it's the front end that is the most mispriced, not the back end. So the 10-year yields look at a decent level to me, and probably a good entry point for bond investors.
So when you hear what he's talking about, right, because me, Corey, and Jimmy are like money nerds, and we always struggle with how to make it simple and bring it to you all. But he's saying the 10-year looks okay. The 30-year looking crazy. What's going to happen? Absolute bedlam. It's not going to be a good thing for everybody.
Yeah, like And anybody with any economic sense understands that. Like, because the thing is, when you get your mortgage, it's generally a 30-year instrument, which is they tied it to the bond market. They literally tied it to the bond market. And so if that bond market rate is going up, what's going to happen to your rate? just saying.
And just to point this out to everybody, when bond yields go up, bond prices go down. All right, so just keep that in mind, y'all. There's an inverse effect. All right, so Jarrell's in the building. What up, Jarrell? Anthony's here. Emeka's here. He's going to take good old U.S. of A and default like his last 3 bankruptcies.
Yeah, but that doesn't affect him because he's made like $4 billion in his first 7 months as president. So it's not affecting him. He doesn't care.
He doesn't care at all. At all. And that's kind of part of the problem when you pimp out the presidency the way it's being pimped out. And listen, everybody pimps out the presidency. But the way he's doing it, unprecedented. So, all right, Cora, what else you think folks should be looking out for going forward this week?
I mean, I just track where the money is going and how it's going, because that's really, in the markets, that's really all I care about. You know what I mean? Like, a lot of people care about a lot of different things. I just want to know where the money flows are going. And like that, what you gave as a good example, sector rotation is real. So that's literally tracking money flow, right? So that's, things that track money flow for me are important. I'm looking out for next week. I think CPI is coming out next week on the 11th. So that's the next thing I'm looking at. That's another thing that tracks money. Some of these are, neither here nor there, but all of them together mean something.
You got to put it all together. Yeah.
So I'm going to, I'm going to take a look. I think that's happening Thursday next week. So that's the next thing I'll be looking at.
I was trying to pull that up to confirm. I do believe you're right, though. I do believe it's next Thursday. So, I mean, this is we are in interesting times. But the one thing that remains constant, those who have cash and know how to strategically deploy that cash tend to make out on the long term. And that's not what I says, not what Corey says, not what Jimmy says. That's what history says, right? So don't believe us. Look at history. And look at the raw data. And, a lot of times I get labeled a hater because I really want people to do their own research. I know I might be bugging on that, but you shouldn't trust anybody, or what's the saying? You can trust but verify. So at least verify everybody. I don't care who it is. If it's me, if it's Black Jesus, if it's anybody, verify everybody.
Y'all can look at the same numbers I look at, because again, I don't do nothing but basic. Like, I just go right on the websites and look at the numbers. Like, it's literally just sitting there. So anything I say could be verified quickly by quick Google search or a GPT query, or literally just going to the federal government websites. I really don't do I promise you I'm not doing no deep dive research. None.
It's not rocket science, y'all. It's really not a rocket science. The study of money isn't as complicated as many believe it is. And so I'm looking up what my leap is, because I told you I was getting smacked around with that. Let's see. So I brought a leap on XLE. And if y'all don't know, XLE is an ETF that tracks the energy sector, primarily oil. Most of the companies in XLE are like the Exxons, the Chevrons, the BPs. And so I believe oil prices are going to go up. Why? Because inflation is going to go up. And one of the biggest drivers of inflation is oil, energy. So, right. All right. So I brought a leap January 2027 leap for 140 with a strike price of 140. Right now, that XLE is trading at $87. So I'm just going to sit and wait. What you think, Corey?
Congratulations to you.
Wow.
Again, I'm tracking money. I understand what you're doing, and for me, it's more like I'm doing what the economy tells me to do. And right now, the economy is telling me to build capital because our debt is in trouble.
I would agree with that. All right, Jiggles in the building. What up, though? What up? All right, Oprah gonna be like, you got an IMF loan. You got an IMF bailout younger, and IMF rescue, laugh my ass off, grab those ankles for austerity.
Yo, the thing is, these economies are built on each other, and it's the only reason our economy hasn't crashed and burned into the ground already is because people had so much money into it previously that if they let it crash and burn completely, that it throws the world economics into chaos, and it affects them as much as it affects us. But when it gets to the point, and it will get to the point where it doesn't affect them as much as it affects us, that's where it's going to become an issue. And so, like, people are making, like, these countries are preparing to really send us into economic hell. That's really what they're doing.
Yeah. All right, Emeka says, come on, almost capitalization. Did you need to be confident with entering the leap? So that's a bit of a trick question, Emeka. I think I spent about $200 on that leap. I brought a couple different contracts. I brought 4 contracts. So what's 4 divided by 200? Emeka?
4 times 200 or 4 divided by 200?
4 divided by
$50.
50. So I spent $50 a contract. So I love the dumpster dive, y'all. When I see assets go down, I'll buy them. And so when you say confidence, my confidence is based on history. I believe oil prices will go up at some point. When? Now that's the tricky part. I don't know.
You got 2 years to be right.
Right, and I got 2 years to be right. So will there be a war? Will there be something? Will there be some kind of constraint?
Let me tell you why there's going to be a war. And so this is why I just watch certain stuff. They just murked that boat coming from Venezuela, right? So the thing about that boat from Venezuela, even if it was carrying drugs, first of all, it was in international waters. That's not American. That wasn't American soil, American waters, none of that. They murked these people in international waters, which is nuts. This is why nobody trusts us. this is the craziness that people do, right? But besides that, what does Venezuela have that the United States want?
Oil.
The largest oil reserve in the world. And why do the United States want it? Because they're trying to punish China. Because what America does is they try to use embargoes to control people, right? So when they were trying to embargo China and control China, China just went around this and started getting their oil from Venezuela. And so
I just learned something, y'all. Corey, thank you for teaching me something. I thought Saudi had the largest oil reserve.
Nope.
It's
Venezuela. Not in Saudi Arabia. It's in Venezuela. See, this is I when I start tracking things, I really start tracking them.
No. But I bring that up, right? Because I'm fairly good at tracking as well. None of us know everything. And to Corey's point earlier, and I want you to talk about that more, Corey, about the exchange. We can all learn from one another if you're humble enough to do it.
But Venezuela has the largest oil reserve in the world. It's not even close. Everybody be talking about Saudi money. Venezuela is getting that chicken down there. And so what happened was when the U.S. tried to embargo a certain countries, they just start going to Venezuela. And what happened was the U.S. had a puppet regime in Venezuela. So when they embargoed, the puppet regime would use, they would use them basically. And it was basically American-controlled oil for a long time. Then the boy Nicolas Maduro got in office, and he was like, "No, this belonged to us, not y'all." And they tried to kill boy like 4 times. And so this is the kickoff to them trying to get boy out of there again. So yeah, they listen, man. Look at what's happening. They putting battleships right around. Listen, man. They trying to get boy out of there. They sent the Marines. They trying to get the boy Maduro out of there so that they can control that oil reserve and get, basically be able to embargo the rest of the world.
That's crazy. That's crazy.
Just so y'all know what our government is into, bro.
What's the book everybody should read about that, Corey?
Confessions of an Economic Hitman, Part 1 and 2.
Like, and these things have been documented, y'all. We're not just making this up. Corey's not making this up. These things are all documented.
Now, again, you can everything I get is strictly like I'm watching the same stuff y'all seeing, except for because I have a mindset about what I want to track and where I want to track it. This is not it's not even particularly close.
Right. So bringing up to Corey's point, Venezuela has the largest oil reserve in the world. Saudi is number 2. Iran is number 3. Canada is number 4.
2 countries that hate the United States.
Right. Iraq is number 5. And it's funny, they got Russia at 80, but Russia actually also has a large gas reserve as well.
Yep.
But we're not talking about oil.
Reserve.
Right, natural gas, yeah. So they're up there as well, but to Corey's point, they hate America too. So Mecca, just to answer your question, you're talking about confidence to do it. The question is, am I okay with losing $200? And I would say yes, because my strategy is to run my business, which is taxes. So if anybody needs help with their taxes, hit me up. And then I take my profits from taxes and buy assets, particularly in the stock market, because I'm a former institutional investment manager. It basically means I just traded for big accounts on Wall Street, union funds, corporate funds, some high net worth individuals and things like that. But it's really nothing fancy. It's really nothing fancy.
Yeah, listen,
and it wasn't my money. All right, so the EU folks are already saying hospitals are preparing for massive casualties. Yes, I would take the likelihood of conflict and energy crunch to the bank. I think after 2027, Taiwan is history also. I don't think so. I think the U.S. is going to protect Taiwan because a large amount of chips.
They have a military base. They're allowed to have military personnel there. Anywhere where the United States has military personnel, they're trying to basically they can't bully the world if they can't have personnel, quick strike personnel capabilities.
Right. And so I believe the U.S. will protect Taiwan because a lot of chips come out of Taiwan. And so all the laws and everything else, it always comes down to property and capital. What's to be protected?
Yeah.
And it's sad. Nobody gives a fuck about people.
Yeah, man. So just, I ain't mean to get on here and give a whole, geography and
why not?
World.
Why?
Because that's not what I intended to do. Not to say that nobody shouldn't have heard it, but that's not what I intended to do.
All right. So here's a question. Let me ask the folks. Do me a favor, y'all. Put in the chat if y'all enjoyed Corey's geography lesson. I, for one, did.
Geopolitics is something that's closely tied to money, and so you tracking the money, you run into geopolitics. Like I never wanted to get into the geopolitics portion of it, but then I kept tracking the money, and then it just kept running me into the geopolitics of the world. So that's how I started to get involved with the geopolitics, so that I'm able to better track where and why the money is going to where it's going. because I want to know why. Like, I'm not one of them people who just wants to know where it's going. I want to know why it's going there. And so when I
because the why will tell you how long it will be there also.
Yeah, like I wanted to know the why, so it just kept running me into geopolitics. It just kept running face first in the geopolitics every time I'm tracking why the money is going where it's going. So,
and so for me, like I said, we're all money nerds, y'all. So we try to share with y'all what we look at, what we talk about, what we think about. When I was a professional money trader, I was a global macroeconomic investor / trader. And that all has a big play in geopolitics. All of it. All of it. All right, so here we go, Corey. OCL says it's a good conversation. Thank you for joining us, OCL. Jarrell says, thanks for the geopolitical lesson. I'm new to it. So, right. So a lot of times they say the curse of knowledge. So since we know these things, do these things, whatever, sometimes we think everybody knows them. They don't. And I know I'm guilty of that. All right, America says, no problem, only looking at it from a big picture market perspective. The explanations are very useful. Trying to model that into my analysis to see capital flows. See, Corey's spot on. Corey's spot on.
Yeah, like when I say people are dangerous or will cost you money, I have a reason why I'm saying these things is because I'm just like relationships are have the biggest return on investment, regardless of whatever vehicle we're talking about. Relationships have the biggest return on investment. And when you got somebody who can't be trusted and their relationship status always says looking, you know what I mean? Like, you know what I mean? Their relationship status
complicated.
Complicated, always in turmoil. You can't be trusted. You know what I mean? So if you got somebody in charge who can't be trusted, it's going to cost you money.
I don't know if everybody got what he was talking about, but I want y'all to think about that. All right, Lawrence says, knowledge is great. Everything is linked to other fields: economics, society, politics, culture, planning, assets, liability, exposure. Thank you for that, Lawrence. I totally agree. All right. So listen, we're not going to keep y'all long. If anybody has any other questions, speak now, forever hold your peace. Because I'm going to get some Sunday brunch like the church folks do, but I didn't go to church.
I'm going to give me a little Sunday brunch, and I'm about to get ready for these football games that's popping off in a couple hours.
So who's playing today?
Everybody that didn't play on Wednesday. It's like
this is the first week, right?
Yeah, so it's like 12 games on the day. Because one game got played Thursday, one got played Friday, and then another one or two are going to get played on Monday. So all the rest of the games getting played today.
And I'm sorry, y'all. I'm one of those men who don't really follow sports. So y'all might try to come for my man card because I don't follow sports.
Nah, man. Listen, man. There's a lot of reasons why people don't follow sports. I used to be that way. I'm like, man, if you don't like sports, what kind of man are you? Like, or can you consider yourself a man? But then, I grew up a little bit. I grew up like that, but I grew up like that, but I also grew up, so I understand that everybody wasn't raised the same, and so sports is important to everybody as everything. You know what I mean?
Hey, Moore, how are you? Great convo and always great information. Thank you. Also, what would y'all like us to talk about? Never be shy about that, y'all. Throw it in the chat. You can send us an email at blackbookrebels@gmail.com. Feel free to do that. We got a superstar in the building. All right, real quick. Bucks till the world's blow.
My guy, I'm an Eagles fan. So
are you from Tampa?
Yeah, he there. Yeah, man. He
I thought he was from Georgia.
Florida. Nah, man.
Okay.
Florida, man.
Oh, I got it messed up. Okay. All right. Megan says I was telling folks JoJo McGee and his term was only JoJo Magoo. Thank you for the correction. And his term was only a test run. That was a litmus test to put true diminished activity in charge. I think this sets the precedence for a crazy empty seat in office. Okay.
I'm not going to disagree with that, because you never know what the political aspirations of people are, man. People that crave power will do anything to get their way and force their worldview onto the masses. So there's a lot of crazy going on in the world, man. And people forcing their worldview on the masses is always a thing that's going to lead to conflict. At some point, it's going to come to a head and become a conflict. Because
and don't believe us, just watch history.
Yeah, it's going to come to a head at a certain point.
All right, dog pound, go Browns. Okay. All right. Lions. All right. Great analysis on central banks in the bond market today. Thank you, sir. Everybody go follow Dave Williams, the retail trader. The retail trader. I always want to call him Diamond Dave, though.
Yeah, that was his name for a minute.
All right, Andy says, how about them Cowboys? Why are we talking about the Cowgirls? I mean, Cowboys. I mean, sorry.
Anyway, man, listen, you allowed to root for anybody you want to, but that's crazy.
Just having fun. I mean, the Eagles, I did go out on Thursday and watch part of that game. Hurts and Saquon look really, really good. And again, I don't really follow. I used to follow a lot, but I got babies in college now. I can't even think about that stuff. That means I need to make more money.
Yeah, pretty much. When there's things you can't do that you might want to do, it just says you don't have enough money. That's really what it just says. That's literally what you don't have enough money to do it.
All right, Junior says, can finally say that with some level of confidence for the first time in my life. All right, go Lions. Listen, I will say this. I think Barry Sanders was one of the greatest running backs ever. So that's part of that Lions history. Can't deny that. All right, y'all. So listen, we'll be back on Wednesday. We'll be back on Friday for the Bitcoin giveaway. And we will see you all soon. Have a great Saturday. Y'all stay learning. Yeah, right. No, Wednesday, Friday. Hold on. We got folks coming in. My bad. Still Rocks is in the building. Dino. Appreciate that super chat. Always appreciate the info and insight. Keep doing what you guys are doing. All right, we will. Lord willing. Oh, and I missed this. As long as the chaos keeps volatility in the market, I'm here for it. Cowboys fans in the Stockholm Syndrome abuse relationship. All right, I already had a little joke. I ain't got nothing else after that, y'all. Just jokes.
Peace and love to y'all.
All right, y'all. Y'all be great. Later. And for Jimmy, Black Queens forever.